Let's take a look right now at some key technical levels in the markets. We want to bring in Katie Stockton for that. Fairlead Strategies founder and managing partner, also a CNBC contributor. And Katie, all of a sudden, there are a lot of different moves. We've kind of switched momentum in different directions in different markets. Why don't we talk first about what's been happening with stocks? Because we've seen 3 days in a row of gains for the S&P, the Dow, the NASDAQ, and I think even the industrials, too. So if you're watching some of these things, has this been enough of a shift that we need to think of things differently from a technical perspective?
Yeah, it certainly has. We saw a short-term momentum shift to the upside just in those past 3 days. And it's decisive enough to suggest that we'll see near-term upside follow through. Our short-term indicators all do now point higher, and that's across the board for the major indices, even for the small cap benchmarks, which have really been struggling, as you know. But with the bounce, we have also seen not only improved short-term momentum, but also improved breadth or participation. As an example of that, the percentage of stocks above their 50-day moving averages went from about 9% to now about 26%. And to the extent that that kind of breadth expansion can continue, I think that should add to the longevity of the relief rally. The S&P 500 faces initial resistance right around 4470. And secondary, much more important resistance around that 4,600 level. And that, I think, is the real proof point for the market, that 4,600. If we can see the S&P 500 surmount that, that would be a really big deal from a technical perspective. It would suggest that perhaps the cyclical uptrend, which we do believe to still be intact, is something more than that, something that is more of a resumption of the secular uptrend.
What's the lower level of things at this point? I mean, I know we're looking at 4,200. Is that still the case, or has that moved up too?
Yeah. And as Mike said, it really is a very widely followed level. It's between, for us, around 4,180 up to the 200-day moving average. It does encompass 3 technical factors, adding to its importance. So we would use that as a bit of a stop loss. So we have been recommending over the past couple of days to add exposure, but with a time horizon of about 6 to 8 weeks, that's pretty well aligned with the positive seasonal influences that we tend to have in October and November, and remaining somewhat non-committal as long as that 4,600 overhang of resistance is there. So if we were to see the S&P 500 take out that support down below 4,180, and by that we mean spending a couple of weeks down there at least just to confirm that breakdown, well, then we would say, okay, well, that's all we're going to get perhaps, and that the cyclical down move is upon us. The secondary support, unfortunately, below that is closer to about 3920. And that's why we really need to manage risk, because of the distance to that next support level.
When you're looking at other markets, you think oil is a more interesting case study at the moment, or the yields for treasuries?
You know, it's funny, in our morning note, we mentioned crude oil, but we also mentioned natural gas, which has quietly broken out from a very long-term basing phase. So that's of interest to us. We've seen natural gas futures clear $3, and that was a big breakout. But for crude oil, WTI, we had a gap up in response to the conflict, and it does come within the context of an intermediate term uptrend. So we're looking for crude to retest resistance, which was roughly $94 per barrel. A breakout is somewhat likely based on our indicators and would then target about $100 to $101 per barrel. So we are trusting that this uptrend behind crude is still in place and intact. And with that, we are currently overweight energy in our recommendations, but we think we may not be there for very long, just given the resistance overhead.
Katie, thanks a lot.
Of course.
We'll talk soon. When we come back, though, the first of 2 big inflation reports about to be released. We've got the producer price index coming our way at 8:30 a.m. Eastern time. And ExxonMobil strikes a mega deal with